Hello everyone, today we will be talking about order blocks. What are they, how to use them, how to implement them into your strategy, and also I have my own strategy, which is a strategy that is also well known, that I will show you later in the video. Right now, let's talk about what an order block is, okay? So order blocks are pretty much specific areas on the chart where large institutions like banks and hedge funds have placed large amounts of buy or sell orders, okay? These areas represent zones of strong buying or selling interest. When you identify this block, you can gain a more profound insight into potential future price action, right? So how we'll use them, not use them, but how we find them is when there's a surge of buying pressure, right? So a break of structure. If we have an engulfing candle, so what an engulfing candle is when the next candle here comes and eats up this one, right? It swallows it up. So this candle took all of the volume of this one. So this became, in terms, a order block, okay? Which is also a change in state delivery if you're into ICT and everything. But I'll just use this like that. Where's my order block? So order block, right? Plus the fair value gap here, which we have talked about into the previous video. So when you engulf the candle, you get a small order block. So not exactly a small order block, but a low probability order block. So what it is, a low probability order block is you don't have any confirmations of the future. So you don't know if there's a fair value gap yet. You don't know if there's going to be a break of structure yet, right? So that's a low probability with just the engulfing candle. Okay, you don't know if it's going to continue on that path. Okay. So let's recap here. We had large buying pressure coming in, creating the break of structure. Okay. We had this fair value gap here that got created, which in terms confirmed that price, gave us enough of a large buying pressure, enough of a large buy orders coming in, that this order block here has a significantly higher rate of being respected, right? Since we have more buying pressure coming in. So when price comes back in to either the fair value gap, like this, or decides to come down, hit the order block either at the change in state delivery, which is at the open of the candle here, or at the consequent encroachment that we talked about in the previous video also. Consequent encroachment, which is the 50% of said PD array. So order block 50%, and then you look to go higher, right? So that's the bullish order block. We have the same thing here for a bearish order block. So candle got engulfed here, alright, created the fair value gap, had the break of structure here. So what are we looking to do? Maybe go back down if price wants to go back down, but most of the time you'll come into the fair value gap, like I said, or come down and come down, or go into the order block and come down. Okay, so here would be the CSD, since this is the open of the candle. Alright, and if you want to use the consequent encroachment, here's the order block. Okay, so here, engulfing, if you wanted to take the low probability order block, you could have gotten into this change in state delivery here and come back down. Okay, now we will be looking at live examples. Alright, so we'll be using the live examples from Friday. Here, we'll use this, even if it's just the open, we'll come and use this here. Alright, so what we want to see, this would have been an order block. Alright, so you have this candle that got engulfed, right? So you take the whole candle plus the wick here, you come down here, we rejected off of it, and then we broke through the level. Not all supply levels or demand levels, which are order blocks, will be respected. Not all of them will be respected. If all of them was respected, everybody would be using the strategy, right? Everybody would just be using order blocks all the time. So order blocks, you really need to wait for confirmations. So here you have the order block, candle close, but here you see there's a lot of resistance. Okay, here there's a lot of resistance, and since we had a lot of resistance because of this fair value gap, not this one, this inverse fair value gap right there, FEG, because of this inverse fair value gap consequent encroachment, which is the 50%, we went down, right? Because we never were able to close above it. Alright, but that's just an inverse fair value gap. We won't be really talking about it, but that's one of the reasons why this order block did not work. Okay, once an order block is touched also and retested on, the order block in the future is not to be used again because it got mitigated. It is previous price action, it is in the past, you do not use it. Alright, see, like this one, this order block has not exactly been mitigated. Okay, so for now this one is still clean, still usable, except if you count this retest, but still it is still usable since it is the extreme level of the chart. But this is the order block for the large buying pressure that came in here, and which created, well, technically the break of structure would be here, but it's kind of tight, so we'll just do it here. So you got your break of structure here, or is it? Oh, there it is. And your fair value gap there. This would have been a valid order block, but we never closed above the inverse, above the BC, which at first was a bullish imbalance. At first it was a bullish imbalance, but when we closed under here, it became an inverse fair value gap, and since it was an inverse fair value gap and we never closed above it, we were searching for lower price to come in. So that was the first supply and demand. Here, this would be the supply and demand. Okay, so order block. Here, also have right there. Also have a breaker structure here, right there, and an internal breaker structure here. Alright, so external breaker structure, internal breaker structure. Had our large selling power, selling orders coming in because of the institutions, and you had either this fair value gap and this one. Alright, so these two fair value gaps inside only one order block, that is a high probability order block. Maybe not for a big risk to reward ratio, but it will be an order block that will be respected. Alright, So you got all these SIBIs in here, right there and right there. So look here, order block, which is this whole candle. We tapped into it. Either you enter here at the tap and stop loss there, which would be ARR, that is kind of shit, not gonna lie to you, plus the standard deviation here that we will be using. You're searching for a, oops, like this, searching for a -2 here. We do not have more data coming in, but we'll be using another example to for a better entry in the past, because right now we don't really have any information. So this order block got respected, went down, created another break of structure. No break of structure. That was a liquidity grab, okay? Liquidity grab. So now we're looking bullish. Here was another order block still, because we had this fair value gap in. It was not a high probability order block because there was no real break of structures, but oops. But it was still an order block that you could have used if you were down to risk it. I personally wouldn't have risked it. So those are bearish order blocks. You had this bullish order block, and now we'll be using examples from the past to have a complete overlook of it. Alright, so here we've got some more examples. Here you had your break of structure, right? So the real break of structure was here. So this supply and demand is a high probability supply and demand, and this one was also a high probability order block. Alright, order block right there. You also had your fair value gaps in, which was a SIBI here, and you had another one there which is kind of tight, but you can still see it, and another one there which got retested into, right? So those order blocks all usable. Here you had this retest on the candlestick. You take it just like that at the entry. Stop loss a little above. Standard deviation, take it from there to there, and take profit. You want to take it to the -4 or until the next liquidity was which was here. So you could have taken it until the liquidity there. That was a really big like order block trade, but really order blocks are one of the simplest, easiest, best ways to trade, really, because order blocks are pretty simple to use. Everybody can like understand how it works. It's not really difficult to implement it into your strategy. Let's just say you use trend lines, okay? So trend lines here, you have your channel here, and there you have your other channel, okay? So to have a more specific entry, you could also just use the supply and demand, right? So you know you're in an uptrend, so you're only looking for bullish supply and demands, right? So here it would have been either this one or the consequent encroachment of this one, right? So consequent encroachment, you take your trade there, stop loss below, standard deviation. Let's see what we got. Do we have the 1.5? We do not have the 1.5, so when you saw the reaction at the 1.5, you would have closed the trade, because after the -1 you are in break even. At the -1.5, if there's a rejection, and like a big rejection, because here we created the order block and we were looking for a breakout of the trend line. You want to get out of the trade as quick as possible, because between the minus 1.5 and the minus 1, if price really rejects it, there's a higher chance of just price plummeting, because you haven't used the standard deviation, right, and everything. So this order block, it's either standard deviation or you take the next liquidity here. So this would have been your trade here, right? Same thing here, order block. You could have had re-entered, because you don't have, like, in this whole range, you don't just have to have like only one trade, you know. You could be using this till the next liquidity here, right? And then you had your other entry right here, right? Stop loss right there, take profit, next liquidity, right? And then you had this one that was created, so you use the 50%, you have your entry here, and stop loss under here, take profit, add the next liquidity, right? So you had those two trades, alright? You had those two trades, three trades in one range, with just supply and demand and some trend lines, right? And all these gave you like good RRs that are above 3 RRs. So really, supply and demand is really great. You just need to really master it. So when you master supply and demand, you'll get higher win rates and better entries, right? You'll get to understand that sometimes you don't have to use this one, sometimes you gotta use this one. Sometimes you don't use this one because you know that this created equal lows, right? So when there's equal lows, we're looking to go take the stop loss of the people that took a supply and demand trade here for a higher movement, right? So pretty easy. I'm gonna tell you right now, pretty easy. Here, supply and demand, super great. This one, I would have taken it, and seriously, I would have taken it personally. Would have gotten losses here, like sometimes that happens, but this one I would have 100% taken it, because that was like a clear high. We have multiple fair value gaps into it, like this one, and this one. So all these fair value gaps would have been super would have kind of confirmed the supply and demand. Now, if you understand accumulation, manipulation, distribution, you would have not used that, but that's going to be also for another video. Supply and demand, super easy. We're pretty much finished here. Now I'm going to show you my template. Alright, so here, pretty easy setup. We created equal lows here. Took a long time to come back into, but we are bullish, so we're using this order block. And if you want a bit more precision, you use this one right there, which is called a breaker, but we'll be talking about that after. So that's an order block, okay? Like that. Equal lows here, never tapped into the order block, we never tapped into it, so it is still unmitigated. And we got equal lows, right? So when you hit into the order block, you want to take your trade here, stop loss below the order block, take your standard deviation right there, and you want to hit for a -2, okay? Right here would have hit for 3.88, and if you're really ready to have a good mindset and be ready to be patient, you can hit the -3.5 right there. I never try to hit for the -4 because rarely does it hit, but my zone is between the -3.5 and -4, so I'm pretty much just using the -2.5 as my my take profit. So this one would have been a fucking 6.36. So really great trade right there. We'll be looking at another example. So we got these equal highs here. Last order block would have been about right there, because this one got mitigated. And we have this fair value gap in here for the SIBI, right? So let's extend it, because we have no price action really that came into it right now. Extend right, and let's extend the order block. Wait a sec. Let's extend it right. Perfecto. So equal lows, right? Equal highs. What are we looking for? We're looking to go break through that and go into the order block. If it doesn't get into this one, it'll come and hit this one. All right. So maybe induce this and come in back here, even if it's mitigated though. So let's go. First order block is here. Fair value gap is here. Okay. So you get your entry at the order block here. Stop loss right above there. And now what we want to do is use what we had here as our standard deviation. So you use the whole swing, and we want to target the minus 3.5 or the minus 2. Okay, so those two are my TP levels. When we break through this one, you want to go and take the minus 3.5. Okay, and once you break through the minus 2.5, you know you're gonna get to the minus 3.5. So let's see what we got. Yep. So here you got your first TP hit. Could have gotten out for a 2.92. You take almost 3 times your money. You're happy with that. Or you take the minus 3.5 and you get out with a 4.88 RR, which is pretty good in my opinion, isn't it? Yes. So pretty much done with this video now. I hope you understood what order blocks are, how to use them, what the template is, and I really hope I'll see you in the next video, and that you leave a like, subscribe, and hit that little ring on YouTube. Yeah. So have a good day, have a good night, and if I don't see you again, have a good year.